What's up, everybody? Stacking Surfer here with another awesome interview. Today, we're going to be talking to Lynette Zhang. She is the CEO of Zhang Enterprises and has been involved in currency cycles and really understanding them since 1987. She's one of my favorite people to watch and to learn from on YouTube. And one of the reasons for that is she gives a very unique perspective around the value of gold, and also talks a lot about silver, but really around sound money. And I think she's a great person to hear from and to learn from around what is sound money, why is it important for us, and how does it fit into your portfolio and to your stack. So I want to go ahead and introduce Lynette. Stacking Surfer, like I'm your best friend. Balances in your bank and stack.
Okay. Part of the conversation you had with Andy were on the foreign gold coins, and this happens to be a French rooster dated, it's on this side, dated 1907. Okay. In I think it was 62, President Kennedy wanted to import a bunch of gold, so he gave a similar status to the old foreign gold coins. And so that gives me a level of comfort. Plus, you were talking about the IRAs.
Yep.
So a really good indication of what is bullion is what you can hold in terms of gold inside of your IRA, because all of the gold is standardized in all of these coins, right? And this is even, you're looking at raw coins. They're not slab. They're just, they're basically bullion, right? But they're pre 48, pre 33. So the foreign gold coins, you want to buy anything that is 1947 or earlier, because they did a lot of restrikes in not in 1948, but with the date of 1948. So it's too hard to really tell. So just go 1947 or earlier, and you're going to have a similar status to the pre-33s. And, when we're talking about that, you brought up that, well, less than 1% of the American population, because certainly it's different in other countries, own gold, and so they would not confiscate it again. But you have to look at what the global central bankers are doing, and they're buying more gold than they ever have historically. So then you have to go, okay, and also we're seeing on a global basis, we're seeing the rise of confiscation, but confiscation can have a lot of names, right? Inflation is a form of confiscation, and it's also not a monetary phenomenon. It's a fiat money phenomenon, right? So you've got royalties. And what we're seeing in a number of countries like Zimbabwe, and I believe also there are a bunch of countries that are doing this, especially in Africa, where they require the miners to sell the government 20% of whatever they pull out of the ground in local currency, which means these are currencies that are hyperinflating. That is a form of confiscation. And taxation is another form of confiscation. Please tell me why the taxation on gold is different than the taxation on stocks.
Yep.
The difference is government doesn't want you to buy gold. They want you to buy stock. So there are so many different ways to confiscate, but to your point earlier, most of the people that hold gold in this country hold it inside of an IRA, which means it's bullion, which means it's monetary gold. And it is very easy for them to do a big sweep of that. With the pre-33s, so your slabbed coins, right? You can't hold those inside of an IRA. Why not? You can hold real estate inside of an IRA. You can hold cryptocurrencies inside of an IRA, but you can't hold collectible coins inside of an IRA. It's a different market and a different consideration. And the confiscation or, should they confiscate, really, they don't want your pushback. So since they manage the spot market, and that's what people look at, And how do they refer to the spot market? They don't say spot gold or spot silver. They say gold or silver.
Yep.
So that's about perception management and getting you to think that those prices that they're showing you is how much gold is worth and how much silver is worth. So again, to your point, gold is absolutely wealth preservation. However, having said that, it preserves your ability to purchase over time. Silver preserves your ability to purchase basically the same goods and services over time. So, for example, I recently did something where I pulled up a basket of food from the BLS. I did all of this through the BLS, so anybody can check the work. And a basket of food from 1913 versus, I think I did this the beginning of September. A basket, same exact basket, using the BLS data on both. The food was up between 1913 and 1924 September, about 2,500%. Silver spot silver, not the fundamental value of silver, but spot silver was up about 2,900%. Spot gold was up over 12,000%. So much as this is wealth preservation, it is also the opportunity for growth, simply because its true fundamental value has been suppressed, right? Why is it suppressed? Because a rising gold price is an indication of a failing currency. And to your earlier point about, I won't mention who, but people that once you saw gold hit 3,000 or whatever an ounce get up there, they're going, oh, right? So this is what has been avoided and has been captured in Bitcoin, right?
Yep.
Imagine, I mean, think about this. This is just, it's not a real gold coin. It's just a Bitcoin. But all the cryptocurrencies, how do they present them? Because they have no physical body. You can't see them, right? But their image is either gold, platinum, or silver, all precious metals. There's a reason, because they want you to think about this as digital gold. Where these two things vary, physical gold versus Bitcoin, okay, is that I have a very hard time seeing the full functionality of what this performs, where I know that this is used in every single sector of the global economy. So is silver. So that means that physical metals, gold and silver, even though primary currency metal, secondary currency metal, but they've never, ever, 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 ever gone to zero because they have the broadest base of functionality and the broadest base of demand. And what gold does is it requires governments to have fiscal responsibility. What a concept, right? So they can't just print willy-nilly every time we hit a recession. And what that does every time they do that is it reduces the purchasing power value of what's already out there. And that's called inflation. And again, inflation is not a monetary phenomenon. It is a government of fiat money phenomenon built into the system to enable the government to tax you almost invisibly.
Yep.
That's what they state. So ultimately, I mean, my big battle is to have sound money as part of the monetary system again. And if we don't do this, it isn't just what's going on right now, or even what's going on over the next, few years while I'm still alive, let's say, because I'm 70. I think I'm going to live to be 100, right? So it's not for me, but it's for our children, for all of our children. Because if we allow CBDCs, the central bank's digital currency, what have they said? They've said, that we can have our finger on that economic button 24/7. So, they also said, and then I'll come back to that, but they also said that there is no limit to how low they can push interest rates into negative territory. Because if you go on the Federal Reserve Education Department, the Fed, and you go and in the search bar you put purchasing power of the consumer dollar, that tells you how much that this dollar, or it's true in every country in the world too, how much its true fundamental value is. And there's a big fat zero on the left hand column. So this is going to zero. Where's this going in terms of this? Well, I was having this conversation with somebody the other day, and the fundamental value of an ounce of gold for its primary function, and I'll tell you how to get it because it's not rocket science, is in somewhere in excess right now of $40,000. And the more of this they do, since they have to create debt to do it, the higher that number goes. But I don't want anybody to be nominally confused, because if gold were at 40,000 bucks, I got news for you. This has no purchasing power. You're not going to want to convert this into this for those gains, just like this $10 trillion Zimbabwe note. I am a trillionaire in Zimbabwe, but I can't buy anything with this, right? So we have to understand that, they know how to make this transition, and it is to keep things seemingly as normal as possible so that they lull you into this false sense of security. Bitcoin above $90,000, what's its functionality? Trading. It's a trading vehicle, but it can't be used outside of its system. So if that system goes away, you have nothing. You want to do Bitcoin? Rock and roll hoochie coo. In my personal opinion, it's a Trojan horse. I don't think that it's an accident that it came out in January of 2009 and QE, quantitative easing, came out in March. It is not an accident that they let it fly, because that's how they get you to buy in. How much more of this garbage would have been converted into this if they didn't come out with Bitcoin? And that's not even
and to your point on that too, Lynette, the amount of money that's being sucked up into it is massive. So Bitcoin is just past the market value of silver, and it's heading up for gold. And so the people that are very bullish, or let's call them Bitcoin maxis, they're looking at it thinking, hey, this is the best thing in the world because all the money's getting sucked up into it. Like you said, I also believe it's probably a Trojan horse. I mean, if I'm a central banker and I wanted to increase my control, I would want to suppress the price of gold and silver so I could buy it all up. And I'd want to distract everybody else on something else to where they put their money in there, which then would allow me to, at some point, pull the plug on it. And I know people will argue you can't pull the plug on it, but I can give you a dozen ways you can pull the plug on it. So it is possible, guys. It's not impossible. So, what I caution people with is, if you want to play around with cryptos, it is highly speculative. Only do it with money that you can completely go down to zero on. And if you're going to play it, take profits, put it into gold, put it into silver. Okay. Otherwise, you have no reason to be getting into that. I don't think it's the new money of the next millennium. I don't think it's going to be what everybody ends up using. If it is, it's something I don't want to be a part of either, because it'll end up becoming a CBDC at some point. But to your point, my hope is we can fight the CBDCs and get away from them. And if we can't, I want to have my money outside of that CBD system. I don't want them dictating whether I can go buy 2 hamburgers in the same week or not.
Exactly.
And so that's something I always like to look at when we look at that too. So another question I have for you, we've kind of covered off on potential of a confiscation and that it can look in many different forms.
Mhm.
What's the real difference you see in holding bullion versus holding raw pre 33 gold versus holding slabbed pre 33 gold when it comes to how those metals would be, or that how that gold would be priced and affected by a confiscation of some sort?
Well, this is what I think it's gonna look like. I mean, this is a piece of bullion. It is an Eagle 1924 or 2024, so it's a new coin. And this I can easily hold in my IRA, but they don't want pushback. So what they're likely to do is pay a premium. So let's say they decide to do an overt confiscation because they've been covertly
Yep.
confiscating our work and wealth for since the day we were born. And I think that what is most likely to happen, let's say spots at $4,000 and they say, okay, we're going to need you to turn in our gold. It's your patriotic duty. We've got to fight. We've got to be competitive in the world because, of course, we've got lots of other central banks that are accumulating as much gold as possible. And so we're going to pay you $5,000 an ounce. Well, most people believe Wall Street. I don't know why they still believe Wall Street, but they do. And so they'd go, well, wow, gold is only worth $4,000 an ounce and they're willing to pay me five. Okay. And they would do a whole big sweep because I do not see any of those depositories telling the government, no, 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 you can't take this gold or silver. So most people would cooperate, even those that hold bullion outside, if they don't really understand its true fundamental value, they would probably also turn it in because then they make it illegal to use. But here's the thing. I mean, I know I was born and groomed for this moment in time, and I had my Uncle Al, thank goodness. And I was 10 years old when this happened. He was my favorite uncle. And my parents and I were at his house, and he took me in the back. He took all of us in the back bedroom, and he had two tall floor safes. And he opened up those doors, and inside, you couldn't fit one more raw gold piece.
Dang.
So of course, I was 10. I didn't really understand what I was looking at that time. That was 1964. And he said to my parents and I, if anything should happen to me, Aunt Bertie will be well taken care of for the rest of her life because of what I hold in these safes. Knowing what I know now, my guess would be that he probably had at least three monster boxes in each safe, at least, minimum. So here he is sitting on 3,000 ounces of gold when it legally, when it was illegal to hold more than 5 ounces of gold. I want the kind of gold because I'm executing a strategy. I've studied currency life cycles and those repeatable patterns since 1987. I am quite clear, even though I can't guarantee you what's going to happen. If something has happened the same way over 4,800 times
Mhm.
and we're doing the same thing, I don't think this time is different. They want you always to think this time is different, but that's just not true. It's just the same. So what that does by understanding those patterns and being able to anticipate where we are inside of this life cycle, that enables you to get into the right place at the right time, having the right asset. So while it is absolutely wealth preservation, when you get into the slabbed arena, or even in this because of the price suppression, it's also a growth instrument. And that's historic, right? We can look at those numbers, we can look at the data, and we can see, well, what makes up dynastic wealth? And dynastic wealth is wealth that lasts in families for at least 300 years. So you can think about the royalty in England, the Queen of England, the King of England, right? And what do they really own? Now, of course, they can tax people for their income, but aside from that, they own real estate, they own truly rare collectibles, and they own gold and gems and all of those other wonderful things. Those are the kinds of things. Wealth never disappears, it just shifts location. So when you can accumulate, and you can do all three of them with gold, you can have a gold mine, you can have a really rare collectible like a Fabergé or something like that, that is gold. And you can have, or you could also even do it with collectible coins. I mean, there are some, going back to that confiscation piece, since they control the spot market, eminent domain laws say they only have to pay fair value, right? And they're controlling what you think is fair value. But on these babies, they got to look at every single coin. And much as as at least in the US, maybe 1% of the population, I think it's maybe higher than that, but not much, owns gold. Well, this can go up into the rarefied air, and there are people that will pay $15 million or more for a rare gold coin. That's the category that I want to be in. I don't have to pay $15 million for this coin. I can pay not a whole lot more than spot, to be honest with you. And I'm still in that category. And this is a lot less likely to get confiscated because they'd have to look at every single coin. And this is less than 2% of the total gold market. It ain't worth it. Plus, if somebody spent $15 million on a coin, they're not turning it in for 5,000 bucks.
No way.
Additionally, they either are writing the laws like Treasury Secretary Wooden did when he made these non-confiscatable. Actually, this was non-confiscatable. Anything minted prior to 1933 is classified as rare and unusual. And it is, because you can't go back to what stayed on this 1903 and create any more of these. So I want the kind of gold that I can use in this trend cycle because I am using it to build my wealth, to create that dynastic wealth for my family. And you brought up real estate. Real estate, I mean, this doesn't produce income. Now, there are strategies to replace income, and the sound money strategy that we utilize is built in layers. So wherever you are in that cycle and whatever you need to accomplish, it's based on your goals. So we can replace that income. We can do many things. But right now, what we have is we have this severely undervalued and this severely real estate severely overvalued because it makes up 30% of our economy. So it was targeted openly for reflation. That's going to flip flop, right? When that flip flops, you just grab some of the gains from this and you convert it into that income producing real estate. And you do that when you see that accumulation pattern, right? Because it looks like a cup, the cup formation, and it tells you that smart money has recognized an undervalued circumstance and they are quietly accumulating. We just recently broke out of the gold cup. Silver wouldn't surprise me to break out of it maybe by the end of this year, certainly into next year. So that is an accumulation pattern. That's when you accumulate, because that's when you know that it is severely undervalued and the smart money is accumulating. Just do what the smart money in any given topic is doing for themselves.
And
It's not.
I agree with that. So that's, what I'm looking at now is I've got majority of my wealth in my house, and
Mhm.
you know, I'm seeing capital rotations. And one of those capital rotations right now is really heavy into gold. It's been going on for over a year now with the central banks. And so that's what we're looking at. We're looking at selling our house and moving versus renting it out, because I want to take that capital out of it. I want to restructure it and put it into another form that I think is going to have the next leg up. And so anyway, that's what I'm working on right now. We're at least this year, And to me, I feel like I needed to do it months ago. The reality is I probably still have plenty of time to get it in place. Always have a little anxiety around some of these things, how fast it can happen, because usually you have indicators of it and then it just happens. So, the best I can do is not procrastinate it, and I can only
Yes.
go as fast as I can. So we'll do what we can.
So many people think that they have all the time in the world. Well, in another 10 or 20 years.
No.
No, 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 people. No, look at what the Fed, this isn't me saying this. This is the Federal Reserve saying there is only 3 cents left out of the original dollar's worth of purchasing power. And with them dropping the rates, what they're doing is inspiring inflation, because all of these markets are so severely overvalued that they want to go down.
Yep.
And that's deflation. Only one way to fight deflation, and that's with inflation. So what do you anticipate? A whole lot more of this. A whole lot more of this. And I don't see anybody, honestly, in politics that really understands money.